or so. Mayuresh Joshi is now with us. Mayuresh, did you see United Phosphorus Limited's number? Very strong set of numbers. The stock can read it because 3-4 quarters there was a marginal disappointment.
There was, Pankaj, but if you look at the larger picture, there's around $3 to $4 billion in worth of generic of patents coming in, and that is going to create a huge amount of market size for integrated players like UPL. We are assuming a top line and bottom line growth, and we had assumed that of around 10 to 15% on a compounded basis. Numbers have been extremely encouraging and strong, so I think I was optimistic on the stock at lower levels. My own take is that investors holding on to the stock should continue holding on to the stock.
Right, but fresh buying only recommended if there is a meaningful decline?
Meaningful decline, yes, because I think somewhere the valuations probably are coming close to their historical averages, and one really needs to understand the business dynamics going forward. So largely in this price, you are factoring in or discounting to a huge extent the kind of generic patents that I was talking about and the kind of opportunities a player like UPL has to probably garner some market share from the 6 innovators that the world is probably looking at this point of time. And again, I think it's largely factoring in a 10 to 15% growth in terms of top line and bottom line. So I think meaningful decline, yes, for fresh buying, but investors holding on at lower levels should continue holding on.
Right. You know, the company doesn't have a lot of leverage also now, so it's not making the mistakes that it was making in the past when it was growing so fast.
There was a series of acquisitions as well, Pankaj. So I think the leverage did come through on two aspects, organic as well as inorganic, that the company was pursuing. But again, I think the plans that the company has, the larger picture or the canvas that the management probably carries in terms of garnering market share, both in the domestic market as well as integrating their facilities, I think that does augur well in terms of how the cost optimization efforts are playing out for the company. And if earnings are better than expected over the next few years, my own take is that the earnings multiple or the PE multiple should re-rate. But again, I think you need to give a couple of quarters earnings post these numbers to probably get a trend that the company is on the right path in terms of a compounded pace of growing their earnings trajectory. And if that probably happens, I think the stock might even head higher.
How do you look into, probably, a name like DLF? It's done very well, but again, if you compare from the highs or all-time high, it's not, it's still quite low. You think a lot of problem in the real estate space is now coming to an end?
I mean, looking at the data points, Pankaj, not really sure whether it's bottoming out. And though you get signs that if monsoons are good, once the capex cycle starts picking up, there is some meaningful activity on the credit growth, it might have some amount of telling effect. But again, I think it's largely a market, both on the residential and the commercial space, where registration numbers have not increased meaningfully. And the last time I checked the data across the country, I think it has not picked up in the sense that one really expects. So I think the bottom-out process might be a couple of quarters away. And again, I think we'll get ample time to probably look at these stocks at a later stage.
Right, but do you think that something like a DLF or something like any other residential real estate space, not DLF of course is not only a residential play, but a residential play should be a part of the portfolio?
It can, but then you have to be extremely stock specific. What happens in terms of pre-sales, what kind of inventory built up is there on the books, what kind of leverage are they carrying onto their balance sheet is extremely important in understanding how the earnings will pan out. If the softness and the tepidness in the real estate markets continue, specifically on the residential side, and a few pockets are doing exceedingly well, but again the concentration risk in terms of the unorganized players, and though I think the rules have changed with the new bill,
Markets looking flat with a positive bias, 3 points higher. Just wanted to point out Piramal Enterprises. It's a name which is up 6% right now. It's at the day's high, looking in extremely strong. Even yesterday, it was up about 5% or so, 5% higher for Piramal Enterprise. We still have Mayuresh with us. Mayuresh, Piramal Enterprise, do you track that name? A mix of NBFC, pharma plus real estate?
No, Pankaj, not really.
Right. Let's talk about some metal names. That's probably one space which you would have not want to bought at the end of Feb, but that's the sector which has done quite well. Do you see any value over there after the recent run-up? Generally, when metal names go up, they go up 4-5 times.
They might, and again, I think it is more correlation in how the global commodity prices have moved up, whether that be ferrous, non-ferrous, or even on the crude part, and that's giving a fillip to all these stocks. But again, I think time and again I'm hopping on this and sounding like a broken record in terms of the actual demand expected to come through, and if that inherent demand is not being seen, I think the increase in prices at the end level is not going to do wonders for these companies. Again, I think not really sure whether the bottom out process has happened, the supply demand dynamics, both in terms of the international market, how the Chinese demand supply is expected to pan out, and our own inventory levels and the demand supply at our domestic level are important factors to be watched out for. The imposition of safeguard duties, MIP, is to a certain extent helping the end realizations for a lot of steel companies in the Indian context. But largely, I think it is going to be a story of genuine volume and demand recovery coming through. I think a couple of quarters data points will tell us whether we are actually in that phase where actual demand recovery has taken place. And if that cyclical recovery has taken place, I don't mind buying these stocks even if they have run 2 times, 3 times at those levels.
Right. As far as the sugar pack is concerned, so Balrampur Chini, Bajaj Hindustan, some of the other mid-cap names are doing well. Strong fundamental change which people are still refusing to believe.
No, the fundamental change will be seen in the coming crushing season, Pankaj. And again, I think the dynamics will change in favor of the sugar industry, hopefully. Again, the weather vagaries, I think, are going to largely play out in terms of how the global sugar production is going to happen, specifically on the Brazilian part. And going by the trends, currently, I think it is expected that the global production is expected to be low. Having said that, I think even on the Indian context, if you look at the production numbers estimated for the current fiscal year and estimated at the next fiscal year, even if you adjust that for the carryover inventory that we're doing at around 9.3 for this fiscal, that might get tapered down to around 4.5, assuming demand remains constant and you assume the 3 million mandatory exports probably taking place. But what happens with sugar pricing, both in terms of FRP, SAP, with UP elections around the corner, you never really know in how the sugar prices might move. Those sugar prices are expected to move on a higher trajectory over the next 2 years with the on season coming in favor of sugar producers. I think the leverage balance sheets, the kind of subsidy payouts, all these factors need to be closely monitored for the industry as a whole, and the run-up has happened in quite a few of the sugar stocks. Anything related with sugar has run up over the past few months.
Right. Mayuresh, as we were talking, Shriram Transport has declared numbers. Let's just pull up the name. I think there is a miss as far as profitability is concerned, but one has to look into details. 144 crores, that's not the run rate that they do. Their general run rate is around 250, 275 crores. So I think that's why that 2.5% sort of a decline. As far as NII is concerned, 1,475 crores, and I think 1,350 is the run rate that they do over there. So they've done well as far as the NII number is concerned. We'll get into the details of this, but initial reaction seems to be negative. Mayuresh, NBFC's overall, decent set of numbers so far?
They're quite reasonable, and again, a lot of these themes, specifically on the rural discretionary part, have moved up on expectations of a good monsoon coming through. But one really must understand, Pankaj, in companies serving the rural market, I think the cyclical recovery will happen after a couple of quarters. Till that point of time, I think the pain points in terms of asset quality, the pain points in terms of higher credit costs, and also I think moving towards the 150 and 120 provisioning norms is going to take a toll, both in terms of how the reported numbers look on the provisioning front, and again, the asset quality is not expected to meaningfully pick up. I think it's going to be a slow and gradual recovery on that front, which will again have earnings kept in check. So I think the NII growth for a lot of NBFC companies, specifically catering to the rural market, is going to show a slow and a steady and a gradual recovery over the next few quarters. If monsoons are better, as one really expects, I think the recovery in terms of asset quality going bad, I think that improvement will be cyclically seen on these stocks, and that will have a telling effect in terms of how earnings pan out. So I think the markets are preempting a lot of that at the current juncture. So I think these factors need to be watched out as well in terms of NBFC specifically catering to the rural markets.
Right. Can you also, just talk to us about the housing finance company? Indiabull Housing was good, LIC was bad, HDFC Bank was numbers were good. How do you see housing finance companies?
No, generally, I think as a space, housing finance companies should do well. on two counts. A, I think the housing finance companies having a retail exposure should see exponential growth going forward in the next couple of years. Second, the cost of borrowing has come down quite meaningfully. So the NIMs and the spreads that these companies enjoy should be maintained. And third, the asset quality pressures that one really expects a lot of these banks, stroke NBFCs, that they were facing over the past few quarters. I think the stability over there in numbers should be evidently seen as well. So I think it's the loan growth that is going to be having a telling effect in terms of how the top line grows for a lot of these companies. The margin expansion would be quite stable and would expand on a sequential basis. And the bottom line, because of asset quality pressures receding over a period of time, should show compounded growth as well. So yes, I think as a space, remain extremely optimistic on NBFCs, specifically housing finance companies. Within that, I think LIC did not post a bad set of numbers. In my opinion, I think if you've got a long-term view, stocks like LIC, Divan Housing can be looked at on this by long-term investors. Investors holding on to stocks like Group, Canfin Homes. I think those stocks have run up in terms of valuations as well. But you're holding on at lower levels, you should continue holding on these stocks.
Right. If you look at the markets, it's almost shutting about close to about 3 points down for the Nifty, absolutely flat. Axis Bank is down up about 0.6. Bank of Baroda is down about 2%. Tata Steel up 1%. Tata Motors down about 0.6. Reliance Industries down about 1.6%. Bharti Airtel down 2.5. Tata Power up 1.5.
Okay, we've got the closing tally coming through on today's trading session, and as far as today's trade goes, there are the big closing tallies coming through. Mahindra and Mahindra